Yo, what's going on, guys? Welcome back to another video on the channel. Today, I want to go ahead and review my thoughts and expectations for tomorrow, where we have the FOMC meeting, and we will be hearing from Jerome Powell. Now, as we all know, we should be expecting an increase in the federal funds rate. How much it increases, that's the question. Over the last couple of days, the market has started to price in a higher federal funds rate hike, which I believe right now is about a 0.75, a triple rate hike. We have seen the federal funds rate futures drop, which means that the market is pricing in a higher than previous federal funds rate increase. So today I want to talk through what the market is pricing in, what I expect the reaction to be. Of course, remember, I'm not trying to predict what happens here. I'm just giving you some guidelines, giving you an idea of potentially what we can expect. But as a trader, the best course of action here is to wait for the reaction, follow the continuation. We can at least try to prepare ourselves for the upcoming event, but for trading, we need to wait and see the reaction. So we'll go through the technicals, we'll go through the federal funds rate futures, we'll get an idea of what I'm expecting and some of my opinions. Hopefully you guys enjoy it. Press that like button, subscribe to the channel. Let's go ahead and get started. All right, guys, so on the left of your screen, we're looking at the current federal funds rate, and on the right, we're going to have the federal funds rate futures. So as of today, as of 06/13, today's the 14th, but the last reading here is on the 13th, the current federal funds rate is 0.83. The target right now is 0.75 to 1%. As of right now, the federal funds rate is 0.83. Now, here's where things get a little interesting. You guys can see on your screen, this is the /ZQ for July. This is the federal funds rate futures. This ticker tries to price in what the market is, or it shows you what the market is pricing in for the federal funds rate in the future, right? It is the federal funds rate future. It is pricing in what they expect the federal funds rate to be in the future. So you can get an idea here of what the market is now pricing in. This is important because you have to know what the market is pricing in to try to get an idea of what the reaction will be on the meeting tomorrow. So if we go to the calculator, how you get a rate from this price here, you take 100 and you subtract the current price of the /ZQ. 100 minus 98.35. We'll take 35. You get 1.65. So as of right now, the market is pricing in a federal funds rate of 1.65 by next month. If you take the current federal funds rate, which is 0.83, that is a 0.82 increase to get to what the market is pricing in by next month. How do we get to what the market is pricing in next month? I would expect a triple rate hike tomorrow. I believe the only way to get to what the market is pricing in right now is to have a triple rate hike tomorrow. Now, we don't have to get to what the market is pricing in, right? The market doesn't have to get what it's pricing in. We have to understand that the market is pricing in about a triple rate hike. So this comes into play when we talk about what reaction we expect off of what the decision is tomorrow. But before we get into that, we need to know this. As of right now, I believe using data, not trying to guess, not trying to use some kind of crystal ball, by using the data here on the /ZQ, the market has priced in the triple rate hike, or it has at least tried to price in. Of course, there's going to be reactionary moves, guys, right? There's emotions, there's traders, there's algorithms. There's going to be emotional and very large volatility moves tomorrow on this FOMC meeting. But as of right now, if we just look at this data, I believe that the market, after CPI on Friday, tried to price in a triple rate hike. Now, why the sudden drop here, right, on the /ZQ? I believe the sudden drop was due to CPI on Friday. So Friday, we had a large increase, or not a large, but we had a higher than expected CPI reading. Inflation was still hot and still increasing. What needs to happen for CPI to slow down, for inflation to slow down? We need higher interest rates. We need higher federal funds rates. The market reacted to the higher than expected CPI reading by dropping the ZQ, by increasing the federal funds rate futures, which in reaction is causing the market to move lower because the market is pricing in the higher federal funds rate futures. You guys saw the drop on the market yesterday, a very large move to the downside, and I believe yesterday was mostly because of the CPI and because of the increase in the federal funds rate futures. So to recap this, if you're starting to get a little lost here, I know it's a lot. CPI was higher than expected. That means inflation is still increasing. How do we combat that? The Federal Reserve has to raise federal funds, probably more than originally expected. What do you see the reaction here? You see the /CQ moving to the downside, which is meaning that the market is pricing in a higher than previously expected federal funds rate. As of right now, we're sitting at about 1.65, which means we need to go up 0.82 to meet what the market is pricing in by next month. Because of all this, I believe the market is pricing in a 0.75 triple rate hike. That's my opinion right now. Obviously, I don't know what's going to happen, but using the data here in front of us, that is what I believe is going to happen. So now that we have this out of the way, let's go into the chart. Let's talk a little bit about what I think could happen if we get a 0.5, a 0.75, or maybe even a full point federal funds rate increase. All right, guys, so here's the 4-hour chart on the NASDAQ, and you guys know Friday was not a great day after the CPI reading. We had a pretty ugly pre-market on Monday, and then we had a downside move on Monday. I believe that between Friday and Monday, we got the price in of the 0.75. I believe that the market moved lower mostly because of that large increase in the federal funds rate futures because of the CPI reading, and I think the market moved lower mostly off the fact that we were trying to price in a higher than previously expected federal funds rate increase. So that is why I believe you got a pretty aggressive sell-off here. Now, what if we get 0.5 tomorrow, right? Let's talk about the scenarios. 0.5, I think, is probably the worst case scenario in my opinion. Obviously, it's the lowest increase on the federal funds rate, but I think it is what the market is not wanting. I don't think the market needs or wants a soft 0.5 increase tomorrow. You might get some short-term movement off that, but in the long term, guys, I do not think that is the right move for the market. If the market is pricing in 0.75, I don't expect for a lighter federal funds rate increase to be good in the next few months. Maybe it's good day of, but I don't think it's going to be very good because if it doesn't do enough to hedge that inflation, it's not going to be very good for the upcoming months. 0.75. If we get what the market is pricing in, I think you could hold up here. I don't know if you're going to get a big push. I don't think anything right now could really help the market get a legitimate rally. Maybe you get some upside, but I think this is probably where you want to settle. I think you want to get what the market is pricing in. For us as traders, I think you guys want to see a 0.75. That's what the market is pricing in, and the market doesn't like to be surprised. So if we get a 0.75, I don't want to say the word bullish because there's nothing quite bullish about a triple rate hike, but I could say that maybe we hold, maybe we consolidate. A full point. I think this is where you get a pretty aggressive downside. However, the argument here is that maybe that is the right thing in the long term, right? So you on a 1 point increase, you probably get a pretty aggressive downside move. Maybe in the long term, you start to bounce off of that. But that is my expectation right now, guys. I think the 0.75 is probably the right way to go. I think whatever the market is pricing in, I think is what we need to see. A lighter than expected increase is probably a pretty negative thing for the longer term. Maybe it's a short-term push. 1% increase, which I think is pretty aggressive. I don't think we're going to see that. But if we do, I think that brings you down. Now, for me, here's my targets for tomorrow off of after FOMC. 3% in each direction right now. I think 11,000 is a level that we need to test if we get a downside move off FOMC. And to the upside, I'm thinking 11.7. This is about 3% in either direction right now. So if we get positivity off FOMC, I think 11.7 could be a target. If we get downside off FOMC, I think 11,000 is your target. Now, with all of this said, we did a lot of trying to understand, trying to predict what's going on, and I do not like to do this, right? I'm giving you guys some insight. I'm giving you my opinion. I'm giving you some ideas of what I am expecting. But you need to understand that when I talk like this, when I talk about trying to understand what could happen, trying to see or understand what may happen in the future, I am not taking action off these words. I am not trading based off my predictions or based off what I think could happen, right? This is never the right way to be a trader. We're going to talk a little bit more about the option side of things, the short-term trader side of things. For me, tomorrow, I wait to see what happens. To be honest, I really don't care what we get. Whatever we get, and we trade the direction. So for me tomorrow, guys, I'm going to be waiting to see what the reaction is. Remember that there is almost always a two-legged move. You almost always get one move after the news is released, and then you get a second move after Jerome Powell is starting to talk live. So for me, tomorrow, I wait, I stay patient, I wait for the move, I look for continuation, and I trade that. I don't try to guess to see what happens. But overall, guys, tomorrow should be interesting. It should give you some opportunity. I wanted to jump on here real quick just to give you a little idea behind why I think you're going to get a 0.75. That 0.75 does sort of correlate to some of the data that I'm seeing, the increase in the federal funds rate futures, the CPI data. So you're seeing that the market is starting to price in that 0.75 triple rate hike. So that is what I'm running with. I'm running with data here. I'm running with the idea that the market is pricing in the correct federal funds rate increase. And as of right now, I believe it is 0.75. So I hope this video gives you some insight into tomorrow. It's not meant to tell you what to do because you can't predict the future. So see what happens tomorrow, trade the move, trade the continuation, come hang out in the pre-market live stream where we'll do this analysis once again. If you guys want to get updated tomorrow, press that like button, subscribe to the channel, and I hope to see you guys in the next video. Peace.